It's a regular Monday morning, Wall Street's still waking up, traders are sipping coffee, algorithms are stretching their code, and then ding, a tweet. Tariffs on 200 billion of Chinese goods will go from 10% to 25% on Friday. The tweet came from then President Donald J. Trump on May 5th, 2019. It wasn't a formal press release, no legislation had passed, but the S&P 500 dropped almost 2.5% the next day. Just like that, with a few thumbs on a screen, billions were erased from the US stock market. Does that sound familiar to you guys? This happens again in 2025. So the S&P instantly fell and volatility spiked, and investors generally hit the panic button. That's what we call the uncertainty tariff. Not an official tax, but a fear tax on global confidence, and Trump mastered it. So in this video, I'm gonna go through why this happens, what can you do about it, and I'm gonna give you final thoughts on how to protect your investments, how to protect your money. So you might wonder, why does a tweet make the markets lose their mind? Well, imagine you're the CEO of a global company, okay? You've got suppliers in Shenzhen, factories in Detroit, and customers in Berlin. Suddenly, the rules of the game might change overnight because Trump said so. Tariffs could rise, trade deals could fall apart, and your cost structure just gets destroyed. That's what uncertainty does. Markets can deal with bad news. They can. We've seen it before. But what they hate is not knowing what's going to happen. When Trump made threats, or when Trump is making threats, whether or not he followed through, it doesn't really matter. He introduced chaos into the decision-making process of thousands of firms. That's why he does it, because it works. Second, there's the domino effect. Supply chains today are not local. Everything's not made in the US, although it'd be the dream of Trump. But one tariff in steel affects car manufacturing, electronics, even infrastructures. Investors start recalculating profit margins. And if I start recalculating the money I have in Apple and the money I have in, say, Nvidia, what I'm going to decide is, well, if these guys in the next or in the long run are going to be losing money or they're going to make less profit, this means that my share of that company is also going to be affected by that tariff. So what do? I sell. And not just that, guys. Think that I'm talking about from an individual investor perspective, but think about big investment funds that they move billions and billions and billions of euros. These market funds or these investment funds are basically organized, used with machines. And yeah, I'm talking about machines that design algorithms. Algorithms don't need to wait and see like us, like individual investors. What they do is they read keywords, they detect sentiment, and execute thousands of sell orders in milliseconds. That's why if Trump tweets China and tariff in the same sentence, the market reacts before you've even blinked. The result is what economists call a risk premium. Investors demand more return for putting up with this noise, but in the short run, prices just fall. Remember when Cristiano Ronaldo moved 2 Coca-Cola bottles away from him during a press conference and held up a bottle of water and instead sang agua, water. These small gestures sparked massive headlines, and what it made is Coca-Cola's stock price go down. So imagine just an athlete's reaction to your product can generate massive millions of dollars of losses. So following with that, what can you do when these things happen? So if the market panics every time a politician gets moody on social media, how should you protect your money? Well, first of all, what we always say, take the long view. The S&P 500 has gone through everything, from world wars to recessions, Nixon to the financial crisis. It survived Trump tweets in 2019 and it will survive Trump tweets in 2025. So if your horizon is 10 or 20 years, not just 10 or 15 days, then volatility is just background noise. Don't be worried about it. Nobody likes to see their money drop 2, 3, 4, even 8% in January this year, but it's just part of the game. If you take a long run, you wouldn't be worried about it. Second, park some money in safer assets. So this is also important. It's not good to actually put all your money in the same basket, okay? Money market funds are boring, they are. but they're stable and they're safe. So they've got interest rates higher these days. They're yielding 4 to 5%. That's not nothing, especially when you've got a guy that every time he talks, your markets and your money goes down 2%. So take that into account as well. Third, diversified. That's very important, guys. Don't put all your money in just one place. The more your portfolio depends on one variable, say US equities reacting to US politics, the more fragile it is. A mix in bonds, they add international exposure. Maybe also take into account some alternatives. Don't build a financial house on just one foundation. So just try and diversify as much as possible. Donald Trump didn't just change politics. So just let me give you one last advice and one last view on this. Donald Trump didn't just change politics. He changed how markets react to information. Every tweet became a potential policy. Every thread, a market-moving event. The lines between communication and execution got blurry. And investors had to adapt fast. Think about what happened with Canada, with Mexico, with Europe, with China. So the markets are adapting fast. If you see the last thread that Trump did of 50% tariffs on Europe later this week, it hasn't had any effect or very mild effect on the S&P 500, and precisely is for that, because markets are adapting and they see that when Trump threats, then he finally reaches an agreement with the country or with the continent, so it doesn't really affect us much. So next time the markets wobble over 280 characters, ask yourself, is this noise or is this a signal? And remember, staying calm might just be your biggest competitive edge. So guys, if you're trading, try to go to the long run. I know it's boring, but it's what you need. Hey, if you'd like me to help you organize your finances from an economist's perspective, I'm not going to charge you, so just drop a comment below and let me know, and I'm going to try and organize a video for it. See you soon.